Welcome to today's market report. European stock markets are seen ending the week on a cautious note amid concerns over a highly anticipated coronavirus vaccine, although strong data from China has helped the tone. DAX future traded 0.1% higher, CAC 40 climbed 0.1%, FTSE was flat in the UK. Positive news surrounding potential vaccines to treat COVID-19 has resulted in strong recent gains in global stock markets, but doubts have emerged about the soundness of the results of AstraZeneca's coronavirus drug. This medication was seen as the best candidate to help the developing world, given its inexpensive cost and the relative ease of storage and transportation. These doubts could hinder its chances of getting speedy US and EU regulatory approval, especially with AstraZeneca CEO Pascal Soriot saying Thursday that the company is now likely to run an additional global trial. On Thursday, the UK Health Minister Matt Hancock announced the final details of a regional system set to take effect when blanket restrictions on England's 55 million population end after a month-long lockdown, with almost half of the population still having to live with very tough restrictions as the virus continues to claim lives. On a positive note, China's industrial profits rose at the fastest monthly pace in almost 9 years in October, a further sign that the economic recovery is gathering pace in the world's second largest economy and a key trading region for European companies. Wall Street will reopen on Friday for a half session following the Thanksgiving holiday, but trading volumes are likely to remain low. In corporate news, Unilever will be in the spotlight as consumer goods maker trades in Amsterdam for the last time before a merger over the weekend of its Dutch and British corporate arms into one legal entity based in London, ending 90 years as a hybrid company. Oil prices weakened on Friday, retreating from an 8-month high in thin trading given the US holiday and as traders look ahead to next week's meeting of the major oil producers. Crude futures traded 1.7% lower at $44.94 per barrel. Brent fell 0.3% to $47.87 per barrel. Both benchmarks have risen by around 6% this week. Gold futures rose 0.1% to $1,806.25 per ounce. On the FX front, GBP/USD holds the higher ground heading into the European Open, with the bulls looking to test the 134 level amid favorable technicals and broad-based US dollar weakness. From a near-term technical perspective, the spot is consolidating the upside following a breakout from a bull pennant confirmed on the 15-minute chart. The measured target is aligned at 133.96. The upside momentum gained traction after the 50 simple moving average on the set time frame across the 100 SMA from below, charting a bullish crossover. The relative strength index has turned south but trades well above the 50 level, suggesting that the upside bias still remains intact. The immediate support at 133.67 could likely limit the retracement, although a close below that level could invalidate the bullish formation. With the hard deadline of the end of the transition period just 1 month away on 31st of December, the coming days truly are crucial to reach a Brexit deal. ABN AMRO's base case continues to be that a free trade agreement will be signed. However, even with the deal, Brexit has already been and will continue to be significantly economically damaging, primarily for the UK and to a much lesser degree for its closest European trading partners. Chief EU negotiator Michel Barnier is travelling to London for fresh talks on Friday. Nonetheless, recent reports suggest talks are completely stuck and more headlines are likely during the day. Eurodollar is edging higher as the pair is currently hovering around 119.30. up 0.15% on the day. The pair continues to probe the 78.6 retracement at 119.26. This and yesterday's high at 119.41 we need to clear, preferably on a closing basis, to trigger another leg up to the 120.14 August peak. The cross is finding initial support at the 117.86 November 23rd low and 55-day moving average. Writing off the public debt the European Central Bank bought during the coronavirus pandemic could be very dangerous, the Governing Council member and the Bank of France governor warned in an interview, in response to Italy's request to cancel the government debt borrowed from the ECB. The dollar is set to post weekly losses, with traders expecting large-scale stimulus from the new administration, trading at 91.892. This is today's market news. Thanks for listening. We'll see you next time.